Hello and welcome to the VC Ledger. If you've ever thought, I don't have enough money to start investing, think again. In today's video, we're breaking down how you can start investing with just $100 in the year of 2025. Yes, you heard that right, just $100. Stick around, and by the end of this video, you'll have a clear game plan to get started on your investment journey. Let's dive right in. First off, why start with $100? The key is to develop the habit of investing early. Even small amounts can grow significantly over time, thanks to the magic of compound interest. Here's a quick example. If you invest $100 and it grows at an average of 8% annually, in 30 years, that $100 could grow to over $1,000, and that's without adding anything extra. Starting small also lets you learn the ropes of investing without feeling overwhelmed or risking too much. Remember, it's not about how much you start with, it's about starting. 2. Assess your financial situation. Before you invest, take a quick look at your financial situation. Ask yourself, do I have any high-interest debt, like credit card balances? If yes, tackle that first. Do I have an emergency fund? Ideally, you want at least 3 to 6 months worth of expenses saved. If you've got these bases covered, you're ready to invest that $100. 3. Choosing where to invest. Robo-advisors. Robo-advisors like Betterment, Wealthfront, or Acorns allow you to start with as little as $10. These platforms use algorithms to create and manage a diversified portfolio for you. Perfect for beginners. 2. Exchange-traded funds, ETFs. ETFs are a great way to invest in a basket of stocks or bonds. Many platforms like Robinhood or Fidelity let you buy fractional shares, meaning you can invest even if the ETF costs more than $100 per share. 3. Index funds. Index funds track a specific market index, like the S&P 500. They're low cost and ideal for long-term growth. Some brokers allow investments with as little as $1. Stocks. Interested in individual companies? Apps like Robinhood or Cash App let you buy fractional shares of stocks. For example, if Amazon stock is $3,000, you can buy $50 worth. 5. Cryptocurrency. Platforms like Coinbase or Binance allow you to invest small amounts in cryptocurrencies. Remember, this is a high-risk, high-reward option, so proceed with caution. 6. High-interest savings or CDs. If you're extremely risk-averse, in a high-interest savings account or a certificate of deposit, while returns are lower, your money stays safe. The steps to get started. Here's a step-by-step guide to start investing. 1. Choose a platform. Research and select a broker or app that aligns with your goals. 2. Open an account. Set up your account. Most platforms have user-friendly apps. 3. Deposit your $100. Transfer your money into the account. 4. Pick your investment. Whether it's an ETF, stock, or crypto, make your first purchase. 5. Set it and forget it. Stay consistent. If you can, automate your investments. Even small amounts add up over time. Tips for beginners. Here are some quick tips to keep in mind. Think long-term. Avoid trying to time the market. Diversify. Don't put all your eggs in one basket. Keep learning. Follow credible finance channels. Read books and stay curious. Start small, stay consistent. Even $20 a month can make a big difference over time. And there you have it, a simple plan to start investing with just $100. Remember, the most important step is getting started. If you found this video helpful, give it a thumbs up, subscribe to the VC Ledger, and hit the bell icon so you never miss an update. Let me know in the comments where you're planning to invest your first $100. Thanks for watching, and I'll see you in the next video.